Hello everyone, thanks for taking time out of your Saturday morning to join us, and welcome to this educational presentation of the price bar that tells you everything you need to know. I've often been asked this especially with markets that happened yesterday with such a strong move, either to the upside or the downside, the way yesterday was. It's like, Steve, how could you have known what to do, or even while it was happening, how do you trade markets like that? Well, I've often told people it can be difficult at times, but there's nothing you have to listen in terms of an outside fashion where someone to tell you in advance the market's going to do something, or for some indicator to tell you in advance, because the market usually tells you just about everything you need to know. The only trouble is we've never been taught on how to listen to the market. So that's my goal at Specialist Trading and at Pro Trader Strategies. We've developed tools and techniques so that you can learn specifically how to listen to what the market's telling you, and therefore you'll be better in sync with the market. And one of the best ways we do this by teaching you how to listen to the market is with our new platform. I'm very proud of this. This is our new platform I developed with Pro Trader Strategies. It's the PTS Primo Chart. It's education for traders. Basically puts everything I've accumulated in my 40 years of trading into one solid platform for you to learn how to trade on your own. So before we begin, I'm going to share with you a lot of different techniques and ways in which to apply and listen to the market. But please remember that we can in no way guarantee that any of the performance results I'm about to share with you will be repeated in the future. Remember, once again, we are required by law to show you this. So please take a moment to view it. And remember that all these examples I'm about to share with you are strictly for educational purposes only. So as you're taking a brief moment to view our required disclaimer, I would also like to take this time to invite each and every one of you to follow us on Twitter. There's our handle right there. You may want to copy that down at Specialist Trading. I post different things on a daily basis. Last week I posted a lot of signals that are strategies generated, and I also posted a lot of bits of wisdom I've accumulated along the way, little financial wisdom tidbits. So lots of great free information, so feel free to follow us on Twitter. Now, as I stated at the very beginning of this presentation, we're a little bit different from other webinars you may have attended in the past in the fact that our only goal is to educate you. We are first and foremost an educational company. We don't promise to have the perfect system that's going to generate thousands of % per year. We don't promise to have the perfect time frame or market to trade. We know the perfect market that you should be involved. We don't believe in that. Our philosophy is that no two traders should ever trade alike. All right, I'm going to say that again. No two traders should ever trade alike. And this goes entirely against the financial industry, because everyone is always taught, well, you go to this chat room or this trade room and listen to the way I trade, or you follow this master system and do the exact same rules and you'll be prosperous too. It doesn't work that way, because if it was that simple, then 80% of all traders would be successful. But it's the other way around. 80% of all traders fail. So basically what this is telling us is that model doesn't work. And what I've learned in my going on 41 years of trading now is that no two traders should ever trade alike. You should follow your plan. You should follow your temperament in order to make your own decisions. Never make your decisions based off what someone or something else is telling you, not even someone in a webinar. You should be supplied with the proper education so that you can make your own decisions. So this is what we do at Specialist Trading. We provide you with that education. And as you can see here, my goal is not to force feed you signals. My goal is not to tell you what the perfect time frame is or the perfect market. My goal is not to have you come to a chat room every night or trading room to find out what to do the next day. Those are recipes for a disaster. My goal is simply to teach you how to trade with the Specialist Edge. Now, when I was struggling 41 years ago, my mentors taught me these same things. And I believe these have been the things that have allowed me to continue trading for 41 years now. So they've sustained me. Hopefully the same things I teach and pass on to you will be able to sustain you for 40 years going down the road, okay? So since this is going to be conducted like a class, an educational classroom, I want to take all your questions. But if you're new to my presentations, we're a little bit different in the fact that we don't stop at every slide to answer a question the way other webinars do. If we did that, we'd be here for a long time, because I have a lot of slides to share with you. So if you have any questions, please wait till the end of today's class. Okay, we'll be finished in just about a half hour from now, and I have a lot of charts, snapshots to share with you, and it's been my experience that you'll learn better just by simply looking at examples as opposed to me answering questions every 5 seconds. So please, if you do have any questions, kindly wait to the very end of today's class. Okay, so let's start out. And as I said earlier, the market, not some guy in a chat room, not some trading room, not some guy on TV, not some master indicator, not even some guy in a webinar, but the market is always telling you what it wants to do. Now, our job as a trader is simple. It's simply to listen to the market and then jump on board. See, that's all trading is. You simply listen to what the market wants to do and jump on board. Think of the market as a river, not as something you have to battle against every day, not as a competitor, not as something that's always at wit's end with you that you can't figure out. Think of it as a river. All right. Now, if you walk up to the river, you can see which direction it's going. All right. So you obviously know if you want to get from point A to point B, it's going to be very difficult to swim upstream against that current. It's a lot easier if you know the direction of the market and you simply jump on board. You simply go downstream. Trading is no different. In fact, that's all it should be. It should be no different from that. But we'd like to overcomplicate things. We like to look at news. We like to look at earnings. We want to figure out what's going on economically or what's going on politically in the world. And we put all this, pile this, what my mentors called noise on top of things in order to feel like our trading is more valid. But in actuality, that's the opposite. It's been my experience that once you start releasing those things, that's when your trading is more valid because you're listening to the market. So very important here. The market is always telling you what it wants to do. Your job as a trader is simple. It's just to listen to it, find out what it wants to do, and then jump on board. All right, so how do we do that? Well, we do that with our top bottom 25%. This is the simplest way I know of in which to find the short-term trend. Okay? Now people go, well, what do you mean by top bottom 25%? You mean where we are in relation to the S&P or the Dow or where the earnings were, or you mean the economic figures that were released about jobless claims? No, it's simpler than that. Remember, don't overcomplicate things. It just means that these are bars that are closing either in the top or bottom quarter of their range. That's it. And when we say range, for some reason, I don't know when this happened, but traders think that range is from the open to close because most traders trade with candlesticks, so they think that's the range. That couldn't be any further from the truth. Range is simply the high of the bar, the extreme high of the bar, and the extreme low of the bar. If you want to call those wicks, that's fine. If you want to call those just open, high, low, close bars, that's great. But wherever the high is and wherever the low is, that's your range, all right? So you want to look for bars that close either in the top 25%, or in the bottom quarter, the bottom 25%. For example, let's look at this bar right here, okay? Now, it makes no difference if this was a 5-minute bar, a tick bar, or a monthly bar. Absolutely makes no difference. But what you're looking for is this bar to close in the top 25% of its range. So how do we do that? If you're still confused, well, all you have to do is take a bar, divide it by 4 separate but equal parts, from the extreme high of the range to the extreme low, okay? Now, that's a close in the top 25%. You see in candlesticks, the close is right here. And so we closed in that top quarter. So what does this mean? On a short-term basis, on a very short-term basis, it means the market is telling you it wants to go higher. The more you see of these, especially if they're clustered together, this is the market not just telling you, screaming, it wants to go higher. So why would you sell in the face of that? Now, conversely, if you see a bar like this, remember, it makes no difference if this were just a standard open, high, low, close bar, but we're looking at candlesticks now, and all you want to do is take the extreme high and the extreme low. Remember, range does not mean open to close where the body is. Range means the top of the wick to the bottom of the wick, and then you divide by 4. This is the top 25%. This is the bottom 25%. If we closed in that bottom 25%, what is the market telling us? Is it telling us it's time to buy? No, it's telling us that it wants to go lower. You see, this goes against everything we've always been taught. We've always been taught buy low, sell high. But it's really not true. The real thing we should be listening to, the real phrase is sell low, cover lower, and buy high and sell higher. Okay, we're not trying to pick bottoms or tops. That's a recipe for disaster. If you ever heard me speak before, don't ever try to trade tops or bottoms because it's not going to work ultimately. All right, so we know how to define the short-term trend. Go back and look at your charts right now. Any time frame you trade, if you're a day trader, look at intraday charts. If you're a swing trader, look at weekly charts. Go back and look at bars that close in the top 25%. But we found a way to increase our odds for consistency, to listen to what the market wants to do, when we also add another tool that you can start using today, and that's our buy-sell line, okay? So when you put these two together, you're going to increase your odds for consistency tremendously by knowing what the market wants to do. And then all you have to do is jump on board. You can trade any strategy you'd like. You can trade one of mine, one of yours, someone else's. It makes no difference. But now you know you've gone up to the river and seen which direction it wants to go, and then you're going in sync with what the river is doing. You're not trying to fight it. All right, so let's look at this chart here, this older chart in Netflix, all right? Someone looking at this will say, well, yeah, Steve, sure, it's easy to see now that it was going up, but how would we know in advance? This is the beauty of what we've done with our new PTS Primo Charting Platform. We've made it easy for you, all right? Now, what you want to do is click on the buy-sell line once you have our platform, and you're going to get a drop-down menu, different ways in which to view the buy-sell line. And for those of you who aren't new to my webinars, the buy-sell line is simply the 50-period moving average. It tells you the overall trend. So in other words, if price is above the 50, the overall trend is up. If price is below the 50, the overall trend is down. Even with something that simple and powerful, people still forget to use it. So we made it simple. What we did was we added different features for you to view the buy-sell line. Let's click on the background feature. What that does is automatically color the back of your screen whenever you'd like. Click it on and click it off. Now, if you have a red orange background, it means that the overall trend is down. So you don't even have to think. All you see is the background, so you go, okay, I'm just going to be a seller. But when you have a bluish background, as you see right here, it's telling you the overall trend is up. So when someone says like, well, Steve, yeah, sure, you knew it was going up right here, but we wanted to know back here. Well, how about back here? All right. Last year, we knew that Netflix was going up on a daily time frame because the back of the screen was blue. And all this is just telling you is that price is above the 50. This is not something magical or mystical or some amazing indicator that no one can figure out that we won't tell you. This is just a 50-period moving average. Price has been above the 50-period moving average that entire time. So why fight it? The river is going a certain direction. Why fight it? Just jump on board. So even when we had a sell-off here, everyone was thinking, well, we're topping out. We're going to come all the way back down here to fill this big gap. Look what happened. You should have been looking for buy opportunities. All right, so that's the overall trend, and see how simple we make it on our platform, PTS Primo Charting Platform. But now we want to know the short-term trend. How do we do that? Well, we click on the top bottom 25% in the strategy tab right next to it. Everything is just a click away. It's that simple. And once you see that, you'll have another drop-down menu. All you want to do is click on signal arrows, all right? And automatically look at all the bars that closed in the top 25%. So you see how the market was telling you overall it wanted to go up because the background was blue. And on the short term, look at all these clusters of up green arrows. It was telling you it wanted to go up even higher. See how the market is telling you what it wanted to do? Let's look at a weekly chart in Netflix, all right? This doesn't just have to be in daily time frame, all right? We do the same process. We apply the background screen. As we can see here, when the market was going sideways to lower, we had a red background. So what is the market telling us? It's telling us the overall trend is negative or down. So we don't want to buy here. But once we started to trade in the blue zone, what is the market telling us? It's telling us, yeah, you can buy here. It's okay to buy. The odds will be in your favor. But that's the overall longer-term trend. How do we map out the short-term time frame? Well, we click on the top bottom 25% tab right here, and all of a sudden we see the arrows. Now, when the background was red, meaning the overall trend was down, look at all the red down arrows. But once we crossed over, now we had all these up arrows being in sync, the short-term in sync with the overall trend. Let's look at a weekly chart of UA. Okay, someone's saying, well, boy, Steve, yeah, I would have liked to buy here on a weekly time frame, but then it fell out of bed, and wow, I got killed here. There's no way you would have known that. I mean, there were some bad earnings announcements right here about the company, and you know, the news always kills you. There's no way to find out in advance that something like that was going to happen. After all, we had a really large sell-off. It looked like we were bouncing here. We made major support. It looked like we had a double, maybe even a triple bottom all the institutions were buying, how in the world would I have known this was going to happen? Remember, do you see how I'm justifying all my decisions based off either institutions, bogus support, resistance lines, just convoluted things like that? Why don't I just learn how to listen to the market? And what's the market telling me? Well, we add the background feature of the buy-sell line. And it was telling me this whole time, without having to do anything, that yeah, it's okay to buy here. But once we got to this point right here, well in advance of that sell-off, that you should be out of this market or looking to go short. There's no reason why you should be long this anymore. You see how simple it is to trade once you learn how to listen to the market. There's no reason you have to follow some trading guru, some guy in a webinar. There's no reason you have to spend $20,000 for a master system or some master trading school. It's simple. This is just the 50-period moving average, people. It's nothing advanced. We've just put the color background to make it easier for you. Now that's the overall trend. How would we know to trade the short-term trend? Well, we click on the top bottom 25%. Look at the cluster of up bars on the short-term trend telling us it wanted to go higher. And then once we switched over, look at the cluster of closes on the bottom 25%. You see how the market's telling you what it wants to do in the overall trend and the short-term trend. Another chart here is an older chart of the spiders. Been going straight up. All we do is apply the buy-sell line, and we've known over a year that you should be buying the spiders or the S&P 500. There's been no question that this is not going to go higher until we have a reddish background. We haven't had that yet. And we had the top bottom 25%. Do you think the market was telling us on a short-term basis it wanted to go higher? Here's a weekly chart of the S&P. If you're more of a swing trader or a longer-term investor, same process. We've known for years that we're going higher. There's no reason to even think that the market's topping out. And at the same time, look at all the up arrows, okay? Now, I know up until now, we've just taught you how to listen to what the market wants to do. In other words, we've taken you to the riverbed and we've learned how to decide which direction the river wants to go. Okay, very simple, very basic, and you can start doing this today. Now, we've shown you how simple it is to apply with our PTS Primo Charting Platform because it's just one click away. All you have to do is click on buy sell line, click on top 25%. In less than 5 seconds, you'll see all the arrows, you'll see all the blue or a red screen, all right? But you don't need that. You could just have a 50-period moving average. You could go individually and look at each chart and kind of dissect it and see if it closed in the top or bottom 25%. But up until now, you've just learned how to spot and identify and listen to what the market wants to do. Let's add a trading technique. Let's put a little structure, all right? In other words, if we walked up to the riverbed, well, how are we going to go downstream? We need a little structure. We need a little boat. We need a little inner tube. We need something to get us going, all right? This is in the form of this trading technique. And you notice now I didn't say a trading strategy. I didn't say a trading system. This is just a technique, and a technique differs from a strategy in that even though it's still rule-based, it's just one piece of the puzzle. In other words, it's just identifying either how to enter, how to exit, how to place your stop, but it's not all the pieces of the puzzle together. That's a full-fledged strategy. A technique is usually just one piece of the puzzle, and that's what I'm going to share with you today. I'm going to share with you how to enter, okay, and how to protect yourself. But we really don't know, about money management. This isn't statistically back-tested. We don't back-test anything because if no one is going to trade the same, and we encourage everyone to trade differently, what use is it to have a back test? Because that would mean then you have to trade the same way. And no one should ever do that. You all have the freedom to get out whenever you want, to get in whenever you want, to place your stop wherever you want. And we teach you all these different variables in our courses. So let's look at this trading technique. You'll see how simple it is to trade all the things I've taught you so far, and especially with the new PTS Primo Charting Platform. Now, if we're looking at buy setups, meaning that we have a lot of bars closing in the top 25% of their range. Here's what you want. You want the background feature to be blue, which simply means that price is above the 50-period moving average. Once you see a bar that closes in the top 25% of its range, you'll see an arrow. So you want to buy one tick above that arrow. You want to see price go above that. And then while you're in the trade, you'll simply place your stop below bars with up arrows. That's it. And you'll let the market take you out. Very simple, very easy. All right, so let's look at sells. Now we know what we want to do if we're buying. What if we want to go short? Well, the background is now red. If you don't have our platform, don't worry. That just means price is below the 50-period moving average. Now what we want to do is sell one tick below those bars that close now in the bottom 25% of the range. So if you're looking at each chart, you have to know how to identify a bar that's closed in the bottom 25% of its range. If you have our platform, you'll see a red arrow right there, okay? You just place your stop above, so you want to go short once you trade below that down arrow, and then place your stops above the bars with down arrows. It's really simple, very basic. Let me show you how powerful this is. I'm going to show you a lot of examples in case it seems a little wordy right now. All right, here's an example in TAL. Obviously, it's been going up. Someone right here would say, boy, Steve, look at how this thing has gone up. You know, it's gone up about 8, 10 points. Well, yeah, but we knew it was going up back here. There's no reason to be a victim. And, you know, the way most traders love to be victims and say, gosh, I wish I would have known this was going higher. Well, the market was telling you it was going higher back here because the background was blue. Now, how high? We have no idea. We're not a predictive company. We don't predict how high something will go or how low something will go. We're just listening to the market, and the market was telling you it wants to go higher. So, you know, as a trader, we love to be victims. Once you learn how to listen to the market, you're no longer a victim. You're taking responsibility for your own decisions. You don't have to listen to some guy in a chat room. You don't have to pay $10,000 for some course that doesn't make sense. It's all right here. So the background is blue. You know the market's going higher. You click on the top bottom 25%, and now you see the limeish arrows, the up arrows appear. All right. So let me show you how we do this technique. And bear with me. I'm going to get out a pen here. I don't usually draw on my chart. But here's our first up arrow. So we want to buy once it trades just above there. So here's what you would have bought right there. Okay. That's where your first buy is. And you would have placed your stop below, somewhere down here. So this is your risk from here to here. Now here's the very next up arrow. So when this bar concludes, you place your stop just below it right here. So now you're just, if the price goes down, it goes against you, you're losing just a little bit. But now we continue to generate more up and arrows. So you just move your stop at the close of each one of these bars right here. Now you've got locked in profit because you entered here, and if you get stopped out, you're going to get stopped here. So you've locked in this much profit. And as the stock goes higher, you just move your stop up. Once you see these arrows, that's your reason to place your stop underneath. So now you've locked in a lot of money, and you're just sitting there going, boy, I haven't listened to any news. I haven't gone to any trading rooms. I haven't looked at a ton of indicators. The only thing I've done is listen to the market. I haven't gone to the chat room anymore. I'm not looking at earnings. There's no reason to, because it's all right here in front of you. This is the source. You're trading the chart in front of you, the source. So why listen to anything else? So now finally we traded below. So you exited right here, and look at the nice profit you had. You entered here, and just following this simple technique of listening to the market, you had a nice 7-8 point game. Now you're out of the market, and guess what? Here's another one. So you could have the choice to get in back here again if you'd like. All right? It's up to you. This is not a system. We're not going to tell you how to trade. You can get out and take the week off, or you can continue trading. It's up to you. All right, so let's look at another series. Let me see here. I just have to be able to erase this. If you bear with me. Okay, let's look at the next chart. This is BECN. Now, once again, someone would say, well, Steve, we're going lower. How would I have known that? Well, price is below the 50-period moving average, and we automatically color the back of the screen reddish orange. So you would have known well in advance of this big drop that you were going lower. How low? No one knew, but we know we're going lower. Now we add the top bottom 25% and look at all the arrows telling us the short-term trend. So let's apply this technique to the short side. It's very simple, it's the same process. Here's our very first down red arrow. So we want to go short once we trade below there. So we kind of just draw a line. We go up above, we're still in the red zone, and here's our very first down day. So we're short right here. The next day we go down a little more and creates an arrow, so we place our stop just above there. So if we're stopped out, which we were eventually, we were stopped out right here. We entered to go short here, we got stopped out here, so we lost a little money. That's perfectly okay. But this is what we always tell our students. There's a high level of consistency in these methods. Why? Because you're listening to the market. You're not listening to some guy in a chat room. So don't be afraid to get back in, because many times you'll be able to recoup that loss very quickly because you're listening to the market for the first time. So if you had sat here and licked your wounds and say, boy, this doesn't work. Why am I doing this stuff? I just lost, a half point or a point here, my very first trade. Get back on the horse, because here's another down arrow. So you could have gotten back in here. All right, so you get back in and you see all the red arrows that are generated. There's your stop. Now you move your stop down. Now you've got a profit locked in that could most likely pay for this loss. And then look what happens here. See how the market's telling you in advance it wants to go lower. Now you move your stop down here, here, and you've locked in all of this gain by moving your stop. Whoops. You locked all your stops in, and ultimately on your second trade, you had all of this profit from here all the way down to here. Okay? Here was your first trade, a small loss. You recouped it, and look at all the profit you made. So this is what we mean by consistency, because why? Because you're listening to the market and nothing else. All right, let's look at another one, BITA. Same thing, we're going to go through the same process. The background is blue. That tells us it's okay to buy. We simply apply the top bottom 25% arrows, and here's our first up arrow, so we're going to buy one tick above, and we place our stop just right here. So this is our risk from here to here. As the week goes, nothing much happens, but then finally the stock decides it wants to go higher. So we move our stop from here to here. So we've locked in a profit from here to here. Doesn't do much for the next week, but then it has another up arrow. So now we move our stop from here to here. So now we've locked in a lot more profit. Now remember, all along the way, we're just giving you guidelines. But remember, our philosophy is you're free to make your own decisions. We do not teach nor do we trade systems. Systems require everyone to trade the same way. And remember our philosophy? No two traders should ever trade the same way. That's a recipe for disaster. So even though I'm giving you guidelines with this technique, that's all they are. They're just benchmarks. If you were long here and then you had this really big up day, don't say, well, Steve said I just moved my stop up. No, if you wanted to sell right here on the close, well, that's a good profit. I would take it. Or if I had multiple positions, maybe I had a couple hundred shares, I'd sell 100, half of it, and then move my stop up. So there is no requirement that says you have to trade one way. If you feel you've got a nice profit and you want to get out, get out. That's okay. Now, the same thing here. Let's say you had stayed in the whole time, and then this day you have a nice gap up and we close up here. If you want to sell, that's fine. And then you can get back in a week later right here. So everyone should trade the way that makes them feel the most comfortable. If you want to just get in and out very quickly, and that's the way type of trader you are, then fine. That's the way you should be trading. If you want to go out for the long haul and just keep raising your stops, fine. That's the way you should be trading. But the ultimate truth in trading is that I should never tell you that you have to trade this way, or you should never trade the way someone else does. You're free to trade however you want. The only thing is you need to be supplied with information and sound fundamental education so that you can make your decision on what you want to do. The trouble is, none of us have ever been taught that. We've always been taught, just follow the rules of this guy in this chat room, or just do this system you've spent all this money for, or just listen to this guy on TV and he'll tell you where to buy and where to sell. And you're not making your own decisions. You have to be in charge of your own trading destiny. That's the only way you will become a consistent trader. All right, so let's move forward now. Let's look at some more examples. Here's another down day. I won't draw the lines here, but as you can see, you would have gone short right here, one tick below. Now remember, you could have bought puts, but this is Snapchat earlier in the year, and just lowered your stop all the way to get stopped out, get in again, and ride the second wave down. You see how the market tells you. So many people were looking at Snapchat and saying, I don't understand. This was supposed to be the darling of IPOs. I invested, I bought this at like $17, $20, and now it's like lost half its value. Well, the market told you in advance that it was going lower. Why would you hold on to a position when the market is saying, I'm not going to go up anymore. I'm most likely going to be going down for a while. So maybe get out and get back in later. How about TXT, Textron, okay? When I was a trader on the floor of the stock exchange, this was one of the stocks I used to make a market in. Now here you could have applied the same technique. The very first up arrow, you could have gone long, which would have been here in the opening. Place your stops, and If you had purchased here and then you had this strong up finish and then another strong up finish, well, boy, that would have been a nice place to sell. Then you could have gotten back in again and then maybe gotten out on this close, maybe got back in here. There's a lot of ways to trade it. Or maybe you just would have held on to the entire time. Now in our courses, we teach you different exit levels, we teach you different entry points, we teach you different stop placements, all to give you different formats so that you can decide for yourself which one makes you feel the most comfortable. Let's look at Amazon, okay? The very last year it was going up, very strong up market, then it changed courses. So just because the market changes courses, I know a lot of you are saying, well, what happens when the trend changes? Well, you just change with it. That's like saying, what happens when the river decides to go a different direction? Well, you just go in the direction it's going. Why fight it? So at this point, the river was going higher. So we've used this technique and bought and moved our stop up. And guess what? You would have got stopped out right here using this technique. All right, so you're out of the market. If you placed your stop just below this red arrow, you would have been stopped out. And you would have missed this downward move. And then you could have said, well, you know what? I'm changing directions now. So you go short right below here. You lower your stop, and you would have been stopped out again here. You would have a small gain, and then you could have gotten back in again. Lots of ways to trade this technique. Same way here, a down market in Halliburton, got short, rode it all the way down until you finally get stopped out. Remember, someone would say, well, Steve, this would have been a big loss because you would have sold it, and look what it went straight up. Remember, this technique calls for you to sell below, one tick below that bar with the red arrow. Did this next bar ever go below? No. So you never sold on this. Even though it had a down arrow, you never would have gotten in. That's why you always buy one or two ticks above, such as right here, or you sell one or two ticks below. Because of that, you never would have entered. If you look at letter R, daily, here's a great way in which you could have stayed in the trade the entire time, purchased it right here, and move your stop up all along the way. Right here you would have exited because you went below, and nothing much happens for the next week. Then you get right back in and buy higher, but that's okay, and then sell higher. You're never going to get out at the top, and you're never going to get in at the bottom. So don't even worry about it. You know, a lot of people say, well, Steve, I bought here, and then I would have been exiting here, but how can I get back in again higher? Well, each trade is completed when you're out. You don't stop and think about it and go, how can I do this? I know I had a very difficult time when I was first learning this process on the floor of the stock exchange, but you just have to let it go. You can't move on until you let that last trade go, whether it was a winner or a loser. And there's the fault in both of them. So let's say you lost. So many traders I know have a losing trade, and it stings, and they hold on to that, and it determines how they're going to take the next position. Many times it'll keep you out of the next position. How many times have you had a losing trade or a series of losing trades, and you say, boy, this is not working, I'm not taking the next signal, and then the next signal would have made everything back and more. I'm sure you've all gone through that. I have in the past. All right. Or even worse than that, you've had a series of good trades, and now you get so cocky, you bet the farm, and you start to trade and start to trade things that aren't even there anymore, and then you start to whittle in more losses because you're just getting too cocky. So always let the last trade go, whether it was a winner or a loser, because if you hold on to it, if you attach yourself onto it, it will determine how you take the next trade. Here's an example in TTC. Now, here's a perfect example. Let me get my pointer out once again. This is where you would have gone long right here. You would have moved your stop here, here. You wouldn't have got stopped out, I believe, or maybe even if you would have got stopped out, let's say it was a break-even trade, but then you got in again here, and then here, and then you got stopped out. So here you're having a series of losses. Here you get in, and then here you get stopped out. So you've had some minor losses here. You've had one break-even and two small minor losses. So nothing much is happening. What's that telling you? That's the market's way of telling you that even though the overall trend is up, as exemplified by the blue background, and even though we're seeing short-term uptrend, or as exemplified by the bars closing in the top 25%, there's not a lot of nice, long, trending up moves. So the market is telling you that, it may be getting time to change. So this may be something you're learning how to listen to. It's a little bit more advanced. Someone who's been trading a while learns how to listen to the market better. But after a series of 3 trades and each of them not producing anything or maybe just breaking even, look what happened. Now now you're out of the market, so you didn't get killed on this downward. But now look, we have a sharp down move to the downside. Then you move your stop here, and you've got a very profitable trade. So the market was telling you it was running out of steam. It wasn't telling you you should be shorting yet, but it was just telling you, you know what, I'm kind of running out of gas here, even though the overall trend is still up, as exemplified by the trades that really didn't generate much gain. But that's okay. These consistency methods and techniques are able to recoup those losses many times and get you right back in. Okay, let's go back to the normal drawing mode. And here's another example of how the market is telling you what it wants to do. Now, someone would say, well, here was Steve, the background is blue. Why am I not seeing any up arrows? Why are there no bars closing in the top 25%? Well, don't you think the market's telling you something? It's telling you that even though the overall trend is up, the short-term trend is not, because it's not generating any days that close in the top 25%. Remember, when the market closes in the top 25% of its range, the bar is telling you that it wants to go higher. But for the past 2-3 weeks, it's telling us it doesn't really want to go that much higher, even though the overall trend, which is a much slower type of trend determinator, is taking its time. It's still saying it. But look what happened. So you never would have bought anything, and you never would have lost any money. And right here was your first down arrow. Could have gotten short, and did we know the stock was going to drop down like crazy? Absolutely not. But the market told us. So there's no need to worry about a news event or worry about earnings or worry about what's going on globally or economically. Now, sure, that will affect you sometimes, but there's no need to worry about it because the market told you in advance it was going lower. Now, did we know that it was going to have this sharp, steep gap to the downside? No, but we were on the right side simply by listening to the market. These price bars tell you everything you need to know. Here's a weekly chart of the spiders, okay? Look all the up arrows that have been having. Now, this was before yesterday's sell-off, but this is just telling you prior to that it wanted to go higher. Here's DXCM, as you can see here, a series of down arrows. Nothing much happened until right here. So many times it takes a little time for it to click in, but when it finally does, you have a nice move. You see how the overall trend at least got you on the right side by coloring the background orange-reddish? Let's look at a weekly chart of DKS, okay? Same thing here. People are saying, well, boy, this stock has really fallen out of bed, lost a lot of its value. How would I have known? Well, we knew well in advance that it was going lower because the background was reddish-orange. That's the market telling you the overall trend is down. Now we simply look for these short-term trends right here, as you can see. We didn't get short until this point right there, and then we just reap the benefits to the downside. We can use this on the E-mini futures. Here's a 1-hour chart of the E-mini. Now, here's what we mean by consistency. You would have gone short right here and then covered for a small loss, but then recouped it by the market going higher and higher in the next couple of days. That's an hourly chart. Now we can look at a daily chart of the Canadian dollar. Nothing changes because we switch markets or we switch directions. The same process. You apply the buy-sell line, click on the background feature. It'll automatically tell you whether you should be buying or selling, what the overall trend is, and then click on top bottom, and you don't have to do that calculation of divide the bar by 4. It automatically does it for you and shows you the bars that close in the bottom. Now we just simply want to go short, 1 tick below, move your stop down. You would have got stopped out here for a little gain, get back in, and make some more profits to the downside. This is how trading should be, simple. You notice we didn't look at any news. We never looked at any earnings reports. We never looked at anything globally or politically. We never listened to somebody in the chat room. We never listened to tons of indicators. You see there's no indicators plotted here at all. Your screen is clear. Trading is simple. It's us who make it more complicated than it has to be. All right, so let's recap before we go into the question and answer portion. Remember, if there's one thing you walk away with today from this presentation, it's just this, that the market is always telling you what it wants to do. Your only job as a trader is to listen and then to jump on board. All right, walk up to the riverbed, see which direction it wants to go, and then jump in the river and swim with the current at your back. That's what trading should be. So many traders think that trading is a battle, a zero-sum game. I lost, some guy won, he beat me, or I beat him, he lost. I mean, it's silly. What a silly way to look. That's like, I've said this before, that's like thinking like, boy, for every breath I exhale, somebody wins and takes in that breath. Or every breath I take, somebody loses and exhales. I mean, that's dumb. Sure, you can look at it that way, but why not just look at it as something that is your best friend? Because it's always giving you signals what it wants to do and come on board with it. Do you think this could have helped you yesterday if you're an intraday trader when the market was just going down 300, 400, 500, 600 points? Do you think this could have helped you using the buy-sell line as well as the short-term top-bottom 25%? Remember, these are two great ways to determine the overall and the short-term trend once you put them together. So ask yourself again, do you think these techniques, these edges could have helped your trading this past year? How about this past week? All right. How about this past 24 hours? If you're an intraday trader, don't you think the back of the screen would have been red? Don't you think you would have seen a lot of downward arrows? You could have used this technique to make a lot of money yesterday. Okay. Here's our special discount for all the people taking time out of your Saturday morning and to join us and learn some new things today. We're going to offer you our PTS Primo Charting Platform. Okay, we're going to give you a chance to use it, to have a trial with it, to see how it works for you. You can, all the things I share with you today are going to be yours, available one click away. You're going to see for the first time how simple it is to be in sync with the market because we're teaching traders how to trade on this platform. We're offering you a 30-day trial. Now this usually costs close to $500. We're going to give you a special offer on this 30-day trial. Now let me show you what's included. All right, this is what's included in our PTS Primo Charting 30-day trial. We're going to give you the enhanced buy-sell line. Obviously, that shows you the overall trend. You can color the back of your screen as you see here in front of you. You can have different ways. We also have a fluid feature, which I've shared with you before on other webinars. We also have a bottom feature where it's just on the very bottom of your screen. Lots of ways to use the buy-sell line, and there's a lot of tutorial videos to show you how to apply it. We're also going to give you a full-fledged strategy. Now, before today, I just showed you a technique. You know, it was really just very basic, very simple. But a strategy comes with all the rules, where you're supposed to enter, where you're supposed to exit, where you're supposed to place your stop. And that's strategy 3A. It's great for capturing these really strong, trendy markets. And you've seen there's a lot of volatility that's just come into the market as of late. And this is a great strategy to trade with that volatility. For example here, these are all examples of strategy 3A buy signals. And you can see this is using the fluid buy-sell line feature, a little bit different from what we shared with you today, but you'll get this accessibility. And this is using strategy 3A with the background feature, which I shared with you earlier today too. So when you have a lot of volatility, a lot of momentum, strategy 3A works tremendously. Here's another feature, just the bottom ticker feature for using the buy-sell line, where you want to keep your screen clear and you just have it on the very bottom. We can apply this also to intraday trading. So a lot of you are probably saying, well, Steve, I don't trade stocks, I don't trade currency pairs. Well, here's a 30-day chart of the S&P futures. These are all strategy 3A buy signals, okay? So if you're an intraday trader, this is a great strategy to have. We're giving you all the rules as well. We're also going to be supplying you with our signal scanner. So let's say you're not an intraday trader. Let's say you trade stocks and you like to come home from work and see what the signals are in strategy 3A on the next day. Or you want to see where the top 25% or the bottom 25% bars are for the next day. Well, guess what? You click on your strategy scanner, you click on load symbols. We provide you with a list of symbols so that you can either punch up top stocks that you're interested in. You can create your own list. You can use the S&P 100, the top ETFs, and in a matter of seconds that list appears. Then you just simply hit scan, and once you click on scan right there, you'll see a series of either red or green bars. The red bars say that there's a sell signal in the corresponding stock. The green bars tell you there's a buy signal in the corresponding stock. It's that simple. This whole process takes about 30 seconds, and you'll know tomorrow whether you should be buying or selling with a particular strategy or method you're looking for. But we're not stopping there. We're also throwing in steps 1 and 2. These are 2 proprietary entry techniques. So let's just say you have a method you already like. It's okay, but oftentimes students email me and say, Steve, this method I use is okay, but the entry is faulty. Sometimes I get in too late, sometimes I get in too early. These are proprietary techniques I learned on the trading floor that are designed to fine-tune your entries. And so whatever signal you get, you can apply steps one click away, and it'll show you the best point of entry for that particular signal. We're also giving you over 90 of the most basic and popular technical indicators. So if you like to experiment with other indicators, it's all right there, one click away. And we realize that we have a technical bias. I know a lot of you still love to listen to news. Remember, it's not our job to tell you not to listen to news or not to trade this way. We're not trying to tell you how not to trade or how to trade. We're just saying that news is not required at Specialist Trading and Pro Trader Strategies. But if you like to watch the news, if it does help you with your trading, great. We're supplying you with free Bloomberg TV. We have a media page where all you have to do is click that on. It'll come up right next to your chart, and you'll see a screen there of live Bloomberg TV with all the economic indicators, all the interviews and news that's coming out fundamentally on Bloomberg. That's all included. And then lastly, if for any reason you're having any technical difficulties, you can't load up a chart, or you're not sure how to watch the videos, we have great personalized tech support standing by. They'll answer any question that you may have. So this is all offered in our 30-day trial. And remember, I told you this usually costs, what we're offering here, close to $500, okay? This is the educational portal we feel you've been searching for. All of these things that have taken me close to 41 years to accumulate are all just one click away on our new PTS charting platform. So basically, you would spend close to $500 for all the things we're going to be offering to you. Well, we're going to give it to you for only $7. Okay, so for $7, you get everything I've talked about, plus a full strategy. Plus, you'll be able to use the technique I just revealed to you today on the charts whenever you'd like for only $7. At the end of 30 days, if you're not satisfied, if it's like, well, it's not my cup of tea, I'm more of a fundamental, stock information news type of guy, that's perfectly okay. There's no obligation to renew. We just want you to give us a chance and show you how excited we are about a new platform. And we're confident that you'll be signing up on board after that, okay? So here's how to take advantage of this great deal. My sister site, who I developed the platform with, Pro Trader Strategies, you can contact them. They handle all of our discounts, all of our signups, all of our tech support. You can either email them at trading@protraderstrategies.com, call them directly if you have any more questions at area code 310-598-6677, or simply go to that link at the very bottom of the page. Now that link is not live, but if you see on the chat box on the far right hand corner, they have posted that live link. So all you have to do is click that on in the chat box, and it will automatically take you to that sign up page. Now, if for any reason you're having difficulty or you don't want to go online to register, you would rather talk to a person, there's no obligation. Feel free to contact Pro Trader Strategies. They would be happy to talk to you and to do your discount over the phone, even if you can't. If you're having technical difficulty, I know we have a good crowd here today. Many times, too many people are trying to sign up too quickly and the site blows up. So don't worry if you contact Pro Trader Strategies. They'd be happy to take care of the discount over the phone, and there's no obligation, even if you have questions to ask, okay? I'm going to leave this information up here to copy down, but take advantage of it quickly before this offer, goes out the window, because it's, next time you see us, we may be talking about something else. And thank you for holding off on any questions. As I promised, we have the last 10 or 15 minutes for questions, so I will, let's see. Some people were having difficulty with the audio. We took a sound check as well as a visual check 5 minutes before the presentation. There were no complaints, so oftentimes it's your internet connection. But don't worry, we will send everyone in this presentation today an email link to this recording, because we record all of our presentations. So if you did have a difficulty in hearing or seeing the screens, don't worry, we'll send you a recorded version of this. My only suggestion is not to sleep on that recording and not say, oh, okay, I'll listen to it next week, I'm too busy, because the offer may not stand anymore. I believe the $7 package is just for the next couple of days, okay? Let's see, does this work on intraday chart, like 5-minute and 1-minute chart? Yes, it does, Steve. It works fantastic. In fact, I showed you an hourly chart, but it does work on smaller intraday time frames. For example, I'm sorry that I don't have access to live charts here, but just imagine if you're trading a 5-minute chart of Apple yesterday, or you're trading a 1-minute chart of the E-mini S&P. Now, you know as well as I do that the last couple of hours, the market was going straight down. If you had our platform, you would have seen the back of the screen would have been totally red, okay? Having been totally red, you would have known that, well, the overall trend is down, so I should not be a buyer. There's no way I should be trying to pick a bottom. Had you tried to do that, you would have lost a lot of money yesterday. Okay, remember, it's greater consistency on your part if you are in sync with the river, if you're swimming with the current at your back. And yesterday the current was going straight down. So who are you to try and decide when it's going to bottom out? That's a recipe for disaster. So your job is just simply to listen to the market. The market was telling you it wanted to go lower, and then jump on board. Be a seller. Okay. Now we gave you ways in which to structure it yesterday, but it would have worked perfectly on 5-minute charts yesterday. Okay. It says Steve is asking, do you use the same example 50 period simple moving average line for all your time frame charts, or do you use a different simple moving average line? It's a good question, Steve. No, what I have found is that the 50 period moving average works the best in all markets and all time frames. One of our credos is to keep your trading as simple as possible. And when I was first starting to trade, when I was intraday trading, I would look at 5, 10, 20 period moving averages to tell me, the overall trend. And this is before I was taught the things I'm teaching you by my mentors. But then when I looked at daily charts, well, then I looked at a 50 or maybe even a 100 bar time frame. And then when I looked at weekly or monthly bars, and then I looked at the 200-day moving average. Okay, this is too complicated. It's too silly to switch back and forth every time I want to change markets or time frames. My mentor said, Steve, listen, you're spinning your wheels changing indicators for different markets, for different directions, for different time frames. Try to use one that can transfer over easily onto all markets, all time frames, all directions. And what we suggest is the 50 period moving average. So that's what they taught me 41 years ago. And in 41 years, I have not found a better moving average that works in all markets and all time frames. Now, having said that, if you want to experiment, I know we have some students that say, well, Steve, I realize what you're saying, but I just love the 20 period exponential moving average. That's fine. Our only goal is simply by using the moving average is just to get you on the right side. Just because price is below the 50, it's not a sell strategy. We're not saying, well, sell at the market. Or the first close above is not a buy system that says, okay, buy at the market. It's telling you just what side of the market to be on. Okay, it's telling you the direction of the river. That's all. So that's all it's trying to tell you. Now you have to add structure. So that's what we teach in our courses. We teach you structure. So that's the main point of the moving average. If you feel more comfortable with another time frame, another exponential or weighted moving average, feel free. But as your instructor, as your mentor, I have found nothing better than the 50 period moving average. Okay. Let's see, question. What if the price is above the buy sell line and you decided to buy, but the market stays on consolidation and not trending? Well, that's, in other words, if I can maybe restate that, in other words, you're saying that the overall trend is up, meaning that the price is above, but the market is basically not doing anything. It's kind of going sideways. Once again, as I showed in that example, many times you will see in a trending market, bars do not close in the top 25% of their range. Okay, so as I said in that other example, before the market fell out of bed, it was above the 50 period moving average. It had a blue background, but there were no bars closing in the top quarter of its range. So that was the market giving you signals that there's not a lot of gas here. There's not a lot of momentum. So try that technique. Use the top bottom 25%. Most of the time you won't find a lot of those top 25% bars. So that's your signal not to do anything yet. Now we have other things in our courses. We have strategies that are based off of patterns. We have also strategies that are based off candlesticks. So that's how we determine how best to trade during those choppy, rangy periods, okay? So what I share with you today are just simple overall tools. If we want to define them a little bit more and get a little bit more in detail, we have a number of different courses and strategies that are better suited for choppy markets. We have other tools such as the PET-D, you've heard me talk about that before, that works fantastically during choppy markets. So we just want to introduce, we know we have a lot of new attendees this morning, and we don't want to introduce a $1,000 package right now, one of our most expensive packages, which is $1,000. We want to keep it simple just so that, in good faith, you can learn more about who we are. So we're not going to charge the moon here. We'd only like to keep it less than $10. So for $7, we're giving you the basics, okay? But we do have a number of different tools, methods, and strategies that handle what you're asking about, okay? Great questions. A lot of you, you seem like a lot of skilled traders. You seem like you have some experience because you're asking some very thoughtful questions here. As we conclude, I just want to say, we are, once again, different from most companies in that our only goal is to educate you. That's all we're trying to do, because the reason is because that's the only thing that will sustain you. All right. How many fantastic systems have gone by the wayside? All right. How many fantastic gurus that were great one year, you don't even hear about them anymore. So if there's no consistency in these things, then why should you be paying good money and taking your time and effort to study and learning these things when there's no consistency in them? The only thing I have found in my 41 years, my 4 decades of trading, is the consistency in the market, because the market always tells you what it wants to do. These same things that I share with you today were taught to me 41 years ago. So if they're still working now, this is what you want to rely on, not on some fly-by-night master trader who is here one day and gone the next. Okay, these are not my ideas. These are things that have been passed down through the ages through traders who've learned how to listen to the market. Okay. Now, a lot of you are asking, I really like this, but what happens with the price after 30 days? I believe it goes to like $97, but there may even be a discount with that. So I would check with Pro Trader Strategies, since they handle all the pricing and all the discounts. Okay. So I hope you learned something today. Even if you don't decide to become a student of mine, a member of the PTS Primo Charting Platform, we always like to leave you with some education, just in good faith, to see that we're really trying to educate you. Even if you don't spend $7, probably less than you would spend going to fast food this afternoon, you still took something away from this free webinar and you got some education. If you spend the next couple of hours just studying what I share with you, going back looking at the charts, I'm sure you will be really convinced that this is here to help you, and we're just trying to help you become a better trader. Okay? Thank you so much for attending. I don't want to take any more of your Saturday away from you. I really appreciate you coming out and listening to me this morning. I hope you got something out of it. I really wish you the best of luck, but mostly I wish that you become students of mine and members of our new PTS Charting Platform, okay? Thank you so much. We'll see you next time. Bye-bye.